We're now going to talk about good growth. For growth to be good, it needs to be profitable and sustainable, but also ethical. And this conversation will focus on how we can use the insurance industry to help unleash that capital and creativity. So please, if you could welcome to the stage our panel, moderated by Rowan Douglas, CEO of Climate Risk and Resilience at Howden. Thank you very much.
Panelists, please come here and take your seats. And huge thanks to Barnaby and Peter for those keynotes. I thought they struck quite a chord. Really sort of took and set up this panel fantastically. Also, a thanks to Paul. The genesis of this event was in the summer last year. As many of you know, Paul makes the conduit available as a sort of a hub for London Climate Action Week, and there was an insurance session during that early one evening, and Paul happened to come along. I think there were about 30 of us, weren't there, in the room, and we had a really good debate about insurance and how it was sort of the ultimate community product and really a potential agent of change. And I was saying insurance is the big new old idea, and Paul was, riffing with me, and I said to him, I tell you what, this is about a cultural change. And I said, I'll really know that the insurance sector is moving forward when there's, I don't know, a gathering of folks at the conduit every 3 months, of politicians and policymakers talking about insurance. And he said, well, you're on. So, and this event is really, was kind of a testbed for that, wasn't it? And it's great to hear. I think the first conduit gathering, is it on the 7th of April? 8th of April. Come 7th, because you'll need to get a seat, but 8th. But no, huge thanks to Paul, but obviously critically, huge thanks to you all for coming. Our sector has got so much to offer. It has been at the heart of a cultural scientific revolution in earlier centuries, but somehow it hasn't engaged in the last few decades in the mainstream of all sorts of policy and business discussions, not least obviously around climate. So really excited that we're getting out a bit more, and there's exciting people to meet. So thanks for that. I suppose any final thing I'll say, we'll talk a bit about risk. I'm not Italian, but I'm told on very worthy advice that risk comes from the Italian word risicare, which means literally to dare the gods. And it's the concept that we as humanity, and this was obviously a product of the Renaissance, the Enlightenment, had control over our destiny. We had the audacity to think that we could actually imagine the future and take some level of control over it. And it was that philosophical revolution combined with a scientific revolution of probability and other things, and a political and cultural revolution that led to insurance. And insurance, the idea, risk is, in our sense, defining what it is we value. Assets, homes, social cohesion. What is it we value, and what is it the risks to that value? And the idea that we all will combine resources through taxation or through insurance, premia, into pots of collective resources which are our entitlement if things go wrong, but we don't know we'll get that. We're making that available to the community, be it local or global. It is an amazing product of cultural development, and we take it for granted. And boy, do we need to turbocharge that concept in the next few years and decades. And we're better to begin that journey than on this panel. This panel is about how can we mobilize the use of insurance to mobilize growth and good growth, whatever that means. Now, we've had a great session before this. We had a call, but we didn't say who was going to speak first. So everyone's waiting there. I'm going to start with Claudine, if I may, because Claudine has a senior role at Aviva, driving the sustainability and wider agenda at Aviva, but has only been there a year or two.
Two.
And came from outside of our sector. but has already been quite an influence in our sector. And I think I was so excited when you joined our sector, because I thought you'll bring all that experience. But why did you choose why did you choose insurance for this next big role? But how do you see insurance as a force for growth as well as a force for good?
Thank you. Thank you for picking me first as well. I think bringing that outside in has been really interesting in the past couple of years. I'm a scientist by training, so nothing to do with insurance or the finance sector. So again, that's been quite helpful in bringing that view into the sector. I came to this sector because there's so much potential, and I love making change. That's what I do, and that's what most sustainability professionals do, is go into an organisation, a bit like Mary Poppins, and change things, and then move on to the next one, which is sort of what I have been doing. And I think the potential to change here is very much around risk and how the insurance sector sees risk. It feels like when I've been talking to our actuarial colleagues, it feels a little bit like the yeast in making beer. Everyone has their own formula for that risk in the insurance companies. No one wants to share it because it is such an amazing part of creating value for those organizations. But then we do need to understand how we can change the view of that risk going forward, because a lot of what we do in the insurance sector is rely on data and stuff that's already happened, are less confident to use data about that stuff that's going to happen, and I can understand why, because that data isn't, exactly going to be exact, and the availability of that also is very difficult to find. So my mission is to change that view in the whole sector, not just at Aviva, and to be able to bring that kind of ambiguity into understanding risk and pricing risk going forward, and how we can do that as a whole sector.
Well, I think that's a fabulous mission, if I may say, because while, of course, different insurers and brokers like ourselves who work on behalf of clients into the insurance market, we might have our secret sauce, but it's so important that the key methods and metrics which our sector has pioneered are shared more broadly, so we can all have, if you like, the common lingua franca. It's a bit like, without a shared alphabet, we wouldn't be able to create great literature. We need to open that up, and I think it would be so exciting. So count me in, and I'm sure many in this room to join that cause. Now, I'm truly going to go out of the sector now, because I'd like to come to Claire at the end, because you're truly outside of the insurance sector. You work for Nattergal, which obviously, and not everyone may know Nattergal. I'm sure you'll give people a bit of a description, but it's focusing on nature-based solutions, landscape restoration, with sort of a staff specialist in that, and I guess economists and finance folks. So what brings you to this sort of insurance gathering?
So as you say, Nattergal are a nature restoration business, and actually listening to the conversations this morning, it's been really fascinating for me to see actually how aligned these industries are. Because what we do is actually we mitigate risk. A lot of what we do in restoring nature, whether it's tree plantation, whether it's improving soil health, where it's restoring rivers or releasing beavers, they're all strategies, not tactics, that help to alleviate risk, whether that's flood risk, water scarcity, climate. So nature and actually risk mitigation play very much hand in hand.
Absolutely. And have you got any particular sort of programs, projects, or even asks of the insurance sector?
So we spoke a little bit about this before, but one thing that we're coming up against is essentially what we call NatCap. So natural capital is a new and emerging industry that needs a long-term focus. Restoring nature isn't something you do for a week, a month, a year. It needs very, very long-term investment. And so a lot of the projects that we look at, we're looking at over a 30-year time horizon. And so from that point of view, and Barnaby talked about removing barriers to success, one of our barriers to success is the perception of risk in restoring nature, because it is a long-term investment. It's got a little bit of uncertainty. We've talked a little bit about data. Data plays a very important role. And so I think for the insurance industry, it's what role can they play in helping to mitigate the risk for our investors, so that we can put in place these risk mitigation strategies that look at the root causes of some of the issues that you're dealing with as an industry.
Can I give a quick example?
Please do, Colleen.
So we've just donated 25 million to WWT, Wildfowl and Wetland Trust, and they are creating salt marshes in the UK. And those salt marshes are not only going to be good for biodiversity, bringing back those salt marshes, but also hugely, hugely impactful in terms of flood mitigation. And also, they are sources of carbon sequestration. They absorb carbon. And so we're helping them to develop the carbon code as well for salt marshes.
That's a fantastic example, and I think we might be hearing some more sort of. That's the overture to a symphony that Paul is going to be conducting a bit later on with quite an impressive cast of singers and musicians, I must say. So thank you for that, and I couldn't agree more. And partly, how that de-risking of flood risk can be properly accounted for in terms of the impact it will have downstream, and how can that de-risking be properly valued. So that actually it creates even more economic logic for doing that. And how's that captured? One of the challenges is, I think, to value that resilience, we've got to know the risk and take account of the risk. Ultimately, this is about contingent liabilities. And once you have to express contingent liabilities, then everything you do to reduce that risk, whether it's through the Wetland Wildflower Trust or insurance, then has an immediate economic value. I think the problem is, and I say this as someone in my mid-50s, it means taking a medical. It means we've got to all go through the medical and actually have the right metrics. What is our blood pressure, not just a nice chat with the doctor? And if the blood pressure is a bit high, what have you actually got to do to bring it down, because you want to avoid something much more serious in 5 or 10 years' time. And, like some of us, we might put off going to the doctor, or we might put off going to the gym because we'll think, oh, well, in this another year. And I think we've got to that point where if we can be prepared to take the medical, it'll be painful for a while, but we know the value will be there. And that's probably the key, isn't it? So.
Yeah, absolutely. And then again, I think this was referred to earlier in Barnaby's opening speech, but it's what's the long-term benefit of this for the insurance sector as well. I've spoken to a growing number of businesses who have told me that they are choosing to self-insure against flood risk. And so what's the role that investment in nature can do in actually, again, mitigating that risk so that ultimately it doesn't become an uninsurable risk in the long term?
Yes. By the way, I always slightly concerned when I hear people say, not you in this case, but self-insure. That's usually euphemism for not insuring, not insuring the risk. So just be careful about self-insurance. It often means you're kind of on your own, and that's insurance is about being together, the ultimate community product. Rebecca, may I come to you? Rebecca and I have known each other a wee while because Rebecca's had a key role at the Association of British Insurers for a long time. And when it came to all the big policy issues and preparing for the COP. I remember the COP in Glasgow. I think we used to have a call every couple of weeks, didn't we, as we were preparing for that and all the related sort of financial regulation that was being driven by Mark Carney in those days when he was UN high-level sort of leader in that area. Now he's even got on to his latest job. Rebecca, you've been at the sort of sharp end of all this and where insurance can play its full role, but also maybe some of the challenges we have as a sector too. What's your perspective on our role as a force for good and for growth?
Yes, so I represent the Association of British Insurers, as you say, and we are the trade association for general insurers and long-term savings providers who essentially are providing insurance products for people's retirement. And in the UK, we have the third largest such market in the world. Our members have, I think, £1.4 trillion worth of assets under management. So clearly there's an awful lot that our sector can do in terms of investing in the the UK's transition to net zero, for example. And our members are long-term savings providers. They take quite a long view of their investments, and they're able to sit on those investments for a while, not demand huge payouts in return, but they don't want to play fast and loose with pensioners' money. So I think we see that as a huge opportunity for the net zero transition, which obviously this current government has made one of its priorities alongside its growth mission. For all this infrastructure which needs to be invested in and at scale and quickly. I think it's tempting to see climate change as quite a new and exciting and novel problem, but actually it's something we've been talking about for 20 years or so now. And we know what the sort of technology that will need to be invested in. We know what that is for the UK. If you look at the Climate Committee's carbon budget, which they've just published, it sets out in very detail what needs to be done for electric vehicles or heat pumps. So I think this isn't actually all that sort of new. It's just about getting the right people to take the right risks and to invest in that long term. And applying traditional products like annuities, which are essentially it's essentially just providing a fixed payment in every year of your retirement until you die. Applying those traditional products to these new risks of climate change, and seeing what can be done there.
I think that's such a good point and good example about how we can take some of the existing products in the world of insurance, which insurance has developed over 300 years. All sorts of things have been insured in one context. And sometimes we sort of get a bit narrowly focused on this type of insurance can only be applied in that context. And a lot of this is putting old wine in new bottles. So we did a report with BCG last year looking at the sort of the $20 trillion of investment that will be needed by 2030. This was the the committed investment by 2030 for the low carbon transition around the world. And we reckoned about 10 trillion of that would need insurance. Wasn't quite clear exactly where all that insurance was going to come from, that capacity. Also some new types of insurance. And one of the areas we'd been looking at was carbon capture and storage and the need to scale that up. There was clearly need and demand for that. I remember I'd been in early years a little bit unclear about exactly the role of carbon capture and storage. And I went to a session with Nick Stern at a meeting, and he was very clear with me and others that it was an absolutely critical part of the jigsaw puzzle. So, and colleagues at Howden, we were trying to figure out how to ensure the long-term sequestration of the carbon underground, because it's got to be there forever, but from a legal point of view, it's got to be there for a few decades so that people can fully get the benefit of carbon credits or tax breaks. And that was a concern for investors and developers, And there was some colleagues at Howden who repurposed the environmental liability insurance market, which is usually there to insure against the protection of long-term pollutants after, say, a cleanup of an event, and they reclassified carbon in this sense, in its form underground as a pollutant, and repurposed that market to enable the first insurance policies underwritten by SCOR and I think Liberty, our partners on those particular products, to insure that. And that has hopefully opened up the scaling of investment in CCS around the world. One part of the jigsaw puzzle, there's other elements as well that we've brought together. Because a bit like steam boilers in the 1850s, actually, there was real problems with steam boilers. They were blowing up, killing lots of people, but also losing people lots of money because they were at the sharp end of technology, sharp end of innovation, very risky. And a bunch of engineers and insurers got together in 1850 in something called the Polytechnic and created the Hartford Steam Boiler Company, which created the standards for safe boilers, which made them insurable, which then made them investable, which then was the spark that really led to the massification of steam boilers, particularly in the US in this example. And that was it. And that's the same sort of innovation that we need now in all sorts of new technologies. from agriculture to energy, but particularly, of course, in energy. So it's great to discover what we've got already and repurpose it much quicker doing that than creating completely new things. Finally, if I may, Anne-Marie, on our call, you were such a fascinating example of someone who knew our industry, but also, if you like, were pinpointing during the discussion, if I may, some of the things that we really had to sort of think about and move on. So I wanted to leave you as the final speaker on the first sort of round of panel discussions, just to give your perspectives on what insurance can do. Because I could tell on our call you were a true believer, but if I may say this, a critical friend.
Critical friend. So is every lawyer. We're the enabler of the enablers, really, because it all comes down to the devil in the details, right? And so I think all of these examples are really fascinating and are great at looking at, what is it that's actually incentivizing people to do one or another thing. And that risk understanding is evolving, right? You're right, it's 20 years old, it should have evolved faster. But I think it is getting to the point where people are recognizing various things. Like you talk about CCUS being recognized and people understanding it. The Earth has been sequestering carbon for rather a long time now. It's kind of good at it. And the laws that are in place that either enable one to invest in those kinds of things or not come out of, I think one of the speakers earlier today was talking about people lying. They don't lie, they just have their own outcome in interest. Laws are kind of the same. They have an outcome and an interest, and sometimes the implementation of them is such that it doesn't necessarily move the playing field in a different way. So for example, in nature capital, right, people are very concerned about whether it is permanent, right? And so the laws are written in a way that says we really need to make sure that it's permanent. I think insurance is a fantastic bridge then to say to people, okay, well, how do I get enough certainty around its permanence that I'm ready to take a bet on investing in it as a product, right? And it's that, the other thing that I thought was fascinating earlier today was the risk assessors. I mean, it's that granular, on-the-ground knowledge from people like risk assessors who can say, okay, this is a real risk or it's not a real risk, because the vast majority of companies and people operating their lives don't have time to get into the details, whereas insurance can get into the details because you're paying out based on the details. So it's understanding that, and to Claudine's point, really getting that information out into the world. Like, these are the things that we'll pay out on, and these are the things we won't pay out on. And here are the reasons why. Because we've done a risk assessment about whether or not that makes sense for our money to be after, let alone your money, which we've collected on your behalf to be supporting. So I think that's how I would kind of add into the mix.
I think that's a super point to end this first round. By the way, we're going to have another quick round, but really quick, because then we've been sitting down a long time now. We're into the audience, so please get your questions or observations ready. So maybe 2 or 3 minutes. And those of you who know me know what I'm like. If there's no questions, I will just pick on people I know, or occasionally I don't. So be in control of the risk, control your destiny. You know what I'm saying? Get your hands up. Right. Now, I think that's such a good point, the one you made, because in a sense, insurance should be seen as a form of governance. It's a form of governance in all sorts of ways. One is it's a valve on capital. We say that insurance is upstream of investment in credit. And essentially, credit and investment is subcontracting to the world of insurance what is safe, what is investable. And that's such a powerful role for the insurance sector, because yes, we do have all these risk engineers and others who have to understand all these sorts of risks. It could be legal liabilities or what have you, because yeah, we're on the hook. And if the wider financial sector can, and it already happens, but not in the mainstream, if the wider financial sector can work with the insurance sector to be that partnership, that's the real power. But then to make sure that insurance capital is then fully recognized as a contingent asset against the risks that the banks and investors are worried about. That's the magic. So we're both a governance mechanism and a source of the sort of contingent capital that then allows people to invest or loan with confidence, and that's the key. Or to know where not to, which is the other, we don't want to build in the wrong places, in the wrong ways. So I think that's why it's so important that insurance becomes part of the conversation early on, not at the end. And the final thing to say is, insurance is always governed by public policy and regulation. I'm such an insurance nerd, right? That I wondered, how is it that in Britain we all have to have insurance when we have a mortgage for basically all the risks that we face? And if you're British, you take that for granted. You assume that's how it works in the rest of the world. I assure you it's not. In many parts of the world, there's no necessary requirement to have insurance if you're taking out a loan, and it can be quite patchy. It could be not all risks. And it all boils down to the fact, and I looked it up, in 1936, I think it was, there was a clause in some banking legislation that said banks are entitled to require their customers in the UK to have insurance to protect their liability. And that I think it was just 2 sentences in an Act of Parliament in 1936 that means that in Britain we all have insurance, and there was a standard policy that covered everything you need, kind of thing. It's amazing. We did a bit of research. It wasn't fully detailed, but broadly speaking, we think about 70 or 80% of the insurance that you or I buy in the UK is driven by 7 or 8 acts of Parliament or key regulations. And there isn't a single, I think, natural disaster system in the world now, a country, which is purely private or mutual. So always these systems are functions of public-private systems in some way. And so this is why I think the engagement of insurance in the policy debate is also key, as it was in earlier times, whether it was the Beveridge Report, or 50 years earlier, it was Churchill and Lloyd George working together with insurers in things like the Insurance Acts of 1906, 1908. So we've just got to get this back together again, which is what this meeting and this conduit event's all about. So quick fire questions, and then you know what's going to happen. What do you really would like to see from the insurance sector?
I think there's 2 things, which is, first of all, the innovation in the products that are available for sectors like ours, for businesses like ours, who are creating these long-term nature-based projects. And I know that there's people in the room who are already currently looking at innovation in that sense, but more of it. We need so much more of it to support the industry and the growth of the industry. And there's been many examples of where insurance has played that role in the past already today. And then I think the second thing is just helping your clients understand their nature liabilities and the fact that they are being so overlooked by so many businesses, so many households, and so it's really putting the focus on what's needed to do to restore nature.
That'd be fantastic. And our Nature Supremo, Dan Feather, is there at the back, who I'm sure will be very happy to help on that regard. Claudine?
I think for me, it's really starting to really look at scenario analysis and how scenario analysis can help us then define risk a bit better, and not just looking at the normal scenario analysis, which is sort of litigation and the areas that we're used to, but areas we're not used to. So looking at resilience, looking at nature, looking at different ways of being able to see the world and the impacts that we're seeing, which are not linear, and they're not just one-faceted, they are multifaceted. No one's talked about heat much today. And actually heat is going to be a huge impact going forward all over the world, including the UK. We'll have health impacts from that. We will have roads melting. We will have EVs that are heavier that will be on those roads that will make that even worse. So it's these multifaceted areas that we don't really look at that I would love to see more scenario analysis on.
I think for me, it's want to seeing the insurance sector play more of a leading role in investing in the UK rather than abroad in our UK net zero transition. I mean, we as a sector have made a pledge to invest 100 billion in UK productive assets over the course of the next decade. But, you know, there's quite a lot of work that needs to be done to make sure that those projects that are investable for insurers So working with the likes of the National Wealth Fund to make sure that these blended finance techniques are out there, to make sure that the right actors in the financial services ecosystem take the right risks, to make sure that we meet all of our net zero ambitions.
Real quick, it'd be great if insurance could use both its investing power and its data to remind everyone that tomorrow is not yesterday. And what's happening tomorrow is not a replication of what's going to happen, what you know happened. So.
To dare their future. So thank you so much to the panel. Let's open it up to the bigger panel, to the insurance curious. Oh, thank goodness, a hand. Please, I think there might be a microphone heading your way. Name and affiliation if you'd like, that would be great. And thank you for breaking the ice.
Thank you. Good morning, everyone. I'm Dorota Tale. I lead environmental policy at DBT, Department for Business and Trade. My question to the panel is, how can government play a role in enabling that long-term strategy and long-term view into investment, and in particular into natural capital?
Okay. Picking up a theme.
I think the first point is just being consistent in strategy. I think, you know, governments come in and policies change, and I think that's not very encouraging, and it doesn't inspire basically confidence in the market. So consistency, I think, would be my ask from government in terms of environmental policy.
Yeah, and I think to that point, it's actually looking at the economic levers that are going to help more investment into nature. Because I think nature is going to play a huge part, not only just sort of sequestrating, but also protecting our communities from flood risks. And I think it's a cheaper way to do it than to do it through concrete and cement, and which has its own impacts. So making that possible through economic levers, I think things like biodiversity net gain credits, let's keep them on the table, you know, because they are helping that cause, but other things like that.
And I sound like a broken record, but I think making sure that the blended finance is there such that, you know, it's hard to establish who are the beneficiaries of all of these things. You have free riders, you know, lots of people will benefit from this. So making sure that the right people are also paying for that investment. But sometimes that isn't possible. You know, there will be market failures, and that's where you need government to step in to act as that sort of conduit, to make sure that the blended finance, the right risk is taken by the right people.
Yeah, well, since we're going down the list, all of the above. Consistency, clear directionality. People can't invest into confusion.
Can I just add one more? Planning regulations, please. Making sure that we're not building on floodplains and things like that, and making sure that when we are building, we're building it in a resilient way.
And the other way, of course, is to join the Conduit Insurance Society. So great that our first government department is part of that. Marvellous. Right, I'm going to take one. I'm going to go over here first, but I see a forest of hands to my right. Yes, there's I think a lady behind as far as I'm looking, behind the pillar there. Thank you.
Hi, thank you to the panel. That was great. I'm from a company that works with sustainable startups, and it's been touched on, but I just wanted to ask what role insurance could play in supporting SMEs, producing innovations and technologies for green growth, especially in sectors like construction and other high-risk industries that are dealing with a lot of change from extreme weather events and things like that.
Should I go? Yeah, interesting that you raise things like construction. Look, I think data, it's been talked about, nobody has better data than insurance companies, and I think that's one role certainly is helping people understand the risks and the opportunities themselves. But like I said, it's continuing to innovate. Anna Maria put it very well, the history we had is not the future that we're facing, and so continuing to think about really innovative solutions that are supporting the growth of these SMEs and these new industries.
And as insurers, we also invest. So we have a venture capital fund that invests in new startups. In fact, we invested in Nattigal recently, but we do invest in lots and lots of other organisations that are starting up in this space.
One area of insurance that not everyone is aware of is what's called technology performance insurance, and it's really developed when a when a technology or a process has got through the initial invention stage, and maybe even the piloting stage, but now you're looking to actually sort of scale up, and you need to scale up, and to do that, you need to have customers who are prepared to take a bet and buy it. You also need maybe investors or creditors to give you the oomph to scale up production. And there's a chasm of sort of, it's part of the valley of death, isn't it? And with some technologies and some processes, insurers are prepared to guarantee the performance of that technology within parameters. It's quite a well-established market, and actually there are now specialists working in the low carbon technology space. I don't know if that relates to your space, or but again, there are other markets. I know it's slightly different, but in the world of carbon credits, we've developed a policy to help protect buyers of carbon credits, and it's actually deploying something called the warranties and indemnities insurance market, which was traditionally part of the market that guaranteed the commitments people made when they sell their businesses in the M&A market. There's another related part called surety. Essentially, there's an insurance market to allow people to insure the promises that they're receiving, or indeed they're giving. And so I would just say that in your area, there is actually quite a bit that can be done potentially to help you and your stakeholders use insurance to bridge some, I'm sure not all of those areas. We've got 10. Thank you for that question over there. I'm going to head over here now. Thank you, right at the back. Thank you.
Is this on? Yeah. Hi, good morning. My name is Camila, and I work for TMP, which is a climate consultancy. And my question is more addressed probably at Anna Marie or Claudine, because you've mentioned risk assessments, data, and yesterday is not tomorrow. And I wanted to know specifically what are the challenges that the sector is facing when obtaining, analyzing, and implementing measurements for prevention when it comes to specific and immediate climate crises that are upcoming.
I think one of them is just variability, and obviously future, trying to forecast the future, especially with the models, are kind of all over the place. So you can get a model that's telling you that it's going to be a 1% hit, and you can get a model that tells you it's a 20% hit. And so what on what criteria do you apply the data in the models to assess the risk, I think is probably the hardest one for people. And I think the other one is just people are used to doing things in a certain way, so when they have to do something in a different way, it's also a little bit it's not as easy as if you can just take out last week's assessment and kind of update the numbers.
I think the other major challenge is it's an annual. All risk is accounted for on an annual basis, because all the premiums are on an annual basis, and you pay out on an annual basis. So the whole business is built on 1 year kind of estimations, and that makes it difficult as well.
I think one of the things that we'd love to bring together is a lot of the insurance sector does work on a 1 year basis, home insurance. But actually, a lot of the insurance sector works on a very long-term basis. Life insurance, health insurance, these are. And what we want to do is sort of bridge the short-term extreme expertise with the long-term expertise. Why shouldn't we have infrastructure life insurance that would last for 20 years, as long as you looked after the infrastructure, did certain things, and there are huge challenges, of course, in understanding, in this case, climate-related risk. But I would say, compared to most other classes of business that insurers have to worry about, climate is probably the most predictable. It obeys the laws of physics. We know where it's going. You look at some of the changes that have happened in the world in the last, 6 months. We face much greater uncertainty in most other areas of our business and professional and indeed insurance life than actually this particular area. So there are uncertainties, but I think that often the risk modeling isn't the most fundamental challenge. It's finding ways to allow people to feel comfortable paying the price of risk or appropriately sharing the price of risk. And I think that's going to be probably an even bigger challenge. I think we've got time for maybe a couple. What I'm going to do is, if it works with the microphone, I'm going to take 2 or 3 questions to get the questions in, and then the panelists can take whatever question they like, and any final comments. So I think I can't see with the lights, but I think there's a gentleman there. Thank you.
It's Harmender from SCORE, which is a reinsurance company. So a key component of growth is investment, and there can be a reluctance to invest because of a lack of mandatory standards. Do you think insurance can play an important role in creating standards and therefore confidence in investments?
Perfect, thank you. Hold the answers quickly. I think I saw a hand up there. If you don't mind shouting loudly. Oh, we can get the microphone there quickly.
I don't know that I need a microphone.
There we go.
Isabel Cohen from Nature Finance. We've heard a lot today about insurance as a kind of market-making endeavour, and we've also heard a lot spoken about in terms of resilience. That we're currently economically and politically committed to 2 to 3 degrees of warming. So I'd like to understand what the panel thinks about the role of insurance in adaptation and more generally today.
Fantastic, thank you. So we've got one on standards, one on adaptation. I did see a forest of hands. They've gone down. No, they're coming back up again. Thank you.
Hi, my name is Inga Relf. We have a foundation called Global Choices. It seems to me we have a massive lack of prioritization though in the risk. We're doing an awful lot of activity and different things, but we are missing perhaps one of the greatest risks, which is a systems risk from the loss of the polar ice, both sides. And because it's not monetizable in the easy way in terms of getting carbon credits, and of course markets veer to that and still look at that aspect, and I'm not ignoring that it's a business, but I've been very heartened by what I'm hearing about the insurance industry's ability to be really creative, but also look at the interconnectedness and the interdependence of what we are facing, and how we can value things that perhaps we haven't even thought about valuing in the past. And it's not only monetary value, but our human values. And I think that brings us back to where you were originally, about what insurance was based on. You know, what is the purpose of this? We could make all these wonderful underwriting and make good money, but on the other hand, we can lose it because we haven't prioritized the things that we actually haven't understood as being the main drivers of the disasters that we're facing and the way those very quickly can unfold. So I think I was very heartened by what Peter was saying in terms of, you know, understanding all the interconnectedness of it, the geopolitics, the migration, food security. If you actually look at the science of causality, that comes back to systems like the Arctic and Antarctic.
Super, thank you. I was looking at the wrong clock. I thought we had 10 minutes left. We've got 2 minutes left. But anyway, thank you so much for that. That's about retraining the invisible hand, I think, which was super. So any answers, observations on that? Final words? Thank you for all those interventions. They were fantastic.
I can give a final word in answer to the standards question, and that's yes.
On the adaptation resilience, there's a huge amount of work going on in terms of adaptation resilience in the sector. I mean, Aviva, we've just given £87 million towards nature-based solutions, and that was a donation to recreate things like rainforests, etc. We haven't got long, so I won't go into that too much. But there is a huge amount of work going on in that space.
Yeah, it's lovely to see that sort of there used to be a wee bit of a tension maybe between the low carbon agenda and the adaptation resilience agenda. It all seemed to me to be a false choice, and it's lovely to see both areas now becoming equally highlighted.
Build Back Better as well is a really good
example. Yeah, exactly. Rebecca, any final?
Yeah, I was just going to actually raise Build Back Better as well. I think we're going to hear from Flood Re later today of, you know, what happens when, for example, a building is flooded. How can we as a sector, instead of just returning to as it was, which is sort of how traditionally insurance works, how can we build back to a standard which, if it does flood again, you're more resilient to that?
And to Claire, our critical friend, the final word.
Or Anne-Marie.
Oh, sorry, Anne-Marie.
No worries. I've been called lots of things. I think it's, you know, all of these are great questions. There were like tons over there as well, I'm sure. I think it's about making sure that when you're looking at insurance or looking at rebuild or looking at whatever you're doing or looking at the laws, you're thinking about them critically as if you were starting the system today, right? Instead of and lawyers do this all the time. We build on what's there because that's the easiest thing to do, and precedent drives a lot of things, and I get that, but you have to kind of push that mentality to, okay, well, if I was going to start today, what does it look like, and how far can I push the precedent to what I would like to have started with today?
Well, there's never been an insurance event at the Conduit. We are thinking new and thinking fresh, and with that, hand to the panel. Thank you, Emma.